everyone, and welcome back to another episode of Business Unboxed with your hosts, Kelly, chartered accountant, and Cory, a multiple business owner. Is there a better way to say that? I feel like there's a better way to say that.
I don't know.
Tell us in the comments what the right term is for if you own multiple businesses, then you don't want to
Just
use
a
the word
business
on.
owner.
Well, yeah, but it's like businesses. Anywho, we'll jump into this episode before we get stuck in the nitty gritty. So, you would have just seen that we did an episode about things that make businesses highly profitable. So, we thought it was also good to kind of touch on the opposite side and a few things, and we're just going to touch on 5 that are actually going to kill your profits, essentially. But I'll try and think of a better word than kill because I don't like that. So, yeah, we're going to touch on 5 profit minimizing things or mistakes. So, the first one is ignoring cash flow. Now, I hear this and see this quite often in like the small business groups that I'm a part of, and also people that are not from the financial side or like accounting side of business. And there is this misconception that if you're profitable, oh my God, it's getting late. If you are profitable, you have plenty of cash. And if you're not profitable, you don't have any cash. But there's actually scenarios where you cannot be making a lot of money, but somehow you still have some cash. And then also you could be making a lot of money, but don't have cash. And so the first point is not maintaining, not monitoring, pretty much ignoring your cash flow. The cash flow is what allows you to pay your bills on time. It means that you're monitoring your customers' money coming in and you're not letting those debts get overdue. And so not monitoring that is going to kill your profit because you don't have the money to sit there in order to continue your business going. I don't know what the stat is, but it's a high percentage of businesses that are like have just started, go out of business within like 1 or 2 years, and the highest reason of that normally is they run out of cash. No cash to pay anything means you can't continue in business. You need to continue having money in order to pay your bills, in order to grow. Otherwise, it's not going to work. Do you have any insights on what you do in your businesses, Cory, from a cash flow perspective?
I mean, you look at forecasting or
Mm-hmm.
predicting. Also, you need to be very good at your accounts. So when invoices go overdue, obviously you might give them a couple of days grace, but you need to call them.
Yeah.
Don't sit on it too long because then it gets delayed and delayed and delayed. So you need to take action to get invoices paid when they should be paid. And then if you still
Mm-hmm.
have problems, you either have too many expenses or too little of an income or both. So you need to go and change it. So if you've got invoices being paid regularly, on time, and you're still struggling, then there's a problem with income or expenses.
And actually, a really good example of how you can maybe best manage your cash flow is, I don't know about in other countries, I'm assuming it's relatively similar, but there are a handful of days in a month where most payments are made. 2 of those main ones are the last day of the month and the 20th of the month. I don't know if that's a New Zealand thing, the whole 20th of the month, but either the last day or the 20th are generally the days that bigger companies tend to make payments. And they might do other ones. They might pick one day of the week each week where smaller, like 7-day invoices may be able to get paid. But you may have run into a problem where you allow your customers to pay you the 30th of the month following. So you invoice them on the 21st of January. Their invoice isn't due to be paid until the last day of February, being the 28th. But
Then they get
you,
2 months free credit.
yeah, but you have signed contracts with your suppliers where You are willing to pay them for your invoices. Let's say that same customer you had to buy, I don't know, a piece of timber for or whatever, and you brought that piece of timber on the 21st and they invoice you on the 21st. But your conditions with your supplier are 20th of the month following. So you're then expected to somehow pay your 20th before that same month's worth of invoicing has even come in. So it's things like small things like that where um, if the better thing, I guess, would be you make sure your customers pay you on the 20th and then you have terms with your supplier that are the 31st. So you've kind of got that natural flow in the month where you can cover your costs. Just small things like that to think about or like negotiate those kinds of terms. Right, on to point two, which is something that, Cory, you've actually told me you see quite a lot in the customers and clients that you deal with, and that is either underpricing or just being way too cheap or just not even knowing how to price things. So obviously this is going to kill your profit because if you don't if you're not selling your services or your products to cover your costs, then you're going backwards, not forwards.
Mm-hmm.
So I guess there is a lot of different pricing strategies out there that you can go for it, etc., etc. But I guess the base that you come back to all the time is look at the costs, look at how much, like, and include some overheads in that as well. So how much did the actual product cost if you're a product-based business? Then you've got to add on some fat, for your overheads, for your time, blah, blah, blah. Then you normally add, most industries have a certain percentage, maybe. This is just a very basic pricing strategy, by the way. There are plenty of different pricing strategies. And I think we'll probably, if you guys let us know that you want a whole episode on that, I'm more than happy to do that. And this is also potentially one of those services that I may be able to provide to those of you who are in New Zealand and potentially Australia when I go to start my business. But yeah, if you add on then like a certain margin for your industry, that will give you a general idea of what the pricing is. Also, you can compare yourself to others in the market. But yeah, one sure way to not make a decent amount of profit is obviously not pricing yourself well or underpricing and not covering your costs. And Cory, I think you've already explained a couple of scenarios, but do you want
Mm-hmm.
to explain those again for those who may not have listened to that episode?
Yeah, sure. So um one lady that I spoke to had an Etsy store with t-shirts that she wanted to put on there, and she was asking me about what she should do with pricing. So I sat down with her and said, well, what are Etsy fees? What is the cost of the t-shirt? And it went, we almost doubled the price, I think. And then she said, oh, no, I don't want to charge that much. I want to charge this much. And it was less than her expenses. So I'm like, well, yeah, so you're going to lose money. Like if you're going after this market that maybe doesn't have enough money to buy what the price needs to be, then you need to find another avenue to do it, or something's not going to work. Because there's no
Exactly.
point even starting, and then you've got a big pocket full of cash if you're going to start with losing money.
Mm-hmm.
Um, Another situation is customers wanting to drop their prices because someone else is cheaper than them, or because they want to see some sales come into the business. They're like desperate to have sales come in because it means everything to have a sale. And it's like, well, like obviously there's a whole other conversation there to be had there. If you're not making any sales, then obviously you need to look at a whole bunch of things. But
Yeah.
don't just drop them because you're not making a few sales when you start up your first business. They need to kind of
Mm-hmm.
hold, and if your pricing is a bit higher because your product's more premium or because of XYZ, you need to
Mm-hmm.
kind of hold that spot for a while before you just go and drop it. Because if everyone just drops it to compete, then you just drop it down until there's no point being in business because it's too low.
Exactly. So yeah, that's definitely an important one. There's lots of stuff on Google. I'm sure that if you ask ChatGPT to help you with that kind of thing, it would be able to give you some different strategies. Just do some research, price yourself appropriately. There's different strategies, so you have to pick which one's right for you. There's no one right or wrong answer when it comes to that stuff, but making sure that it covers the cost is the most important thing, and making sure you have that middle room
Mm.
to obviously cover all your other costs in your business that don't bring in money. Because obviously, you paying for your accountant at the end of the year does not bring you in money, but it's an essential cost. So you need to make sure you're adding in all those kinds of little overheads into that extra bit of room in between what you buy it for and what you're selling it for, to cover it, to make sure you can actually make a profit. Right, on to the third point, which is holding on to, or essentially continuing to supply, unprofitable either products or services. And I'm also going to branch out here and throw in that clients and customers can fall into this area as well. I know somebody at work actually who used to own a business, and she has definitely told us stories about certain clients or customers that never paid on time, would either just not pay at all or pay like 3, 4, 5 months later. And it actually became too much to manage that person, that
Mm.
they would come back and say, "Oh, I want another sale." And it got to the point where she said, "No, you know what? You're actually costing me more money keeping you as a client than
Hmm.
me not having you have that money coming in the first place." And so don't be afraid to make those tough calls, whether it be
Yep.
like we kind of talked about in the previous episode, where people may drop products and services that aren't doing well. Yet don't be afraid to not hold on to that. Like, let it go. And if it is a bad client, sometimes it's not worth those few hundreds or thousands of dollars coming in if it's actually going to cost you more and they don't pay on time, because you'd rather put your energy into clients that are going to pay you on time and you know you're going to get paid, and then you can continue to make that profit. You've got that cash flow that's a bit more reliable. And Cory, you've kind of gone through this with a couple of different things.
Yeah, look, you can definitely find clients. I think some people um, get into this thing, especially in maybe the service space, where they feel like the client is in charge of the transaction, and
Yeah,
it is not the case. You're in charge, it is your business. If they become a problem to deal with, then you fire
yeah,
them. You said, look, this
exactly.
isn't working. I've had a couple of instances lately where some clients accused us of doing things we did not do, and they wanted to leave. They threatened us, and I made very short in my emails that that is not appropriate, and we don't work with clients like that. Um, so yeah, there's just assholes in the world, and
That is true.
you don't need to help them.
Exactly. I love that. Right, so on to point number 4, which is poor inventory and expense habits. So this is kind of lean into what we said in the last episode, but also if you are an e-commerce business, and Cory works a lot with e-commerce businesses, if you don't manage the inventory that you have, especially if there's seasonal stock, you can run into some big problems with profits and keeping your profits there, because one, if they don't sell out, you may have to wait an entire year for that season to roll around again before that product is appropriate, or it may
Hmm.
go out of date if it's food based, or if it has an expiry date. Then if you miss that little window of opportunity, you've then spent a lot of money on something that can no longer be sold now. And how are you going to make profit from something you can't sell? You can't, and then you also, that's eating into your cash flow, and then you've got to somehow find the money to then buy new stock to fill that void, because you can't sell the stock that you already brought. So it's a huge thing to know when you're in e-commerce is, what products do I buy? Look at dates if it is food based. And Cory, I don't know if you want to share the news that you've had recently with the listeners, but it's knowing what to get, what expiry dates if it's food based, and it's really about forecasting things that you don't have this wastage, because inventory is a big area that you can have a lot of waste in very quickly, especially with like fashion trends, food, like anything that potentially has an expiry date or is seasonal. Yeah, you can waste a lot of money and profits there.
Yeah, inventory is probably, I would imagine, for most businesses, one of the hardest things to control. Um, where you even start? Um, you have to, depending on the dates. Obviously, some industries you've got long dates, like the wine industry, right? You still have to be very, very careful because you can end up with a big back catalogue of wine that will end up being dated, and then it becomes a little bit harder to move. Unless it's very premium wine, if you've got, two, three, four vintage behind of say a Sauv Blanc that's a standard table wine that's 20 odd bucks or so, it's probably not really, people really don't want to be paying for a vintage that old when it's a standard table wine. And so yeah, I mean, I'm no expert, but you kind of have to uh I guess with inventory stuff, what's good to have is a subscription based model. So if you have people on subscription there, that's basically your forecasting. If people have subscribed to you, you can forecast what they need, when they need it, how often they need it, and then you can produce to that. Maybe add a bit of that. So now for other new subscribers, you have an email list. So if you've got stock that's going out of date soon, or some odd bits and ends, you can maybe do a promotion to move some stock through. So I think in e-commerce, having a database is probably one of the best things you can do in terms of trying to manage inventory. And then obviously there's also some other things you can do. So I've just purchased a chocolate business with my business partner. And so what we're planning to do um, is release a promotion before we have all the stock. So essentially you're pre-purchasing it. So we do more so events based promotions, or we can do this for events based promotions because we can pre-sell the package a month or 6 weeks out from the event. We know exactly how many people have placed an order, exactly how much
Mhm.
stock and everything we need. We buy it a week or two out from when we need to send it, and then it gets sent. And we haven't invested anything that we haven't sold. We only have
Mhm.
bought what we've sold. So there are different ways to manage it. And I know for some businesses you have to buy high MOQs to get a good price. So you've kind of got to be careful. But if you need any help, just reach out to me and I can help.
Yes. Right. And to wrap this episode up, we have the last point, which is essentially not investing in the right marketing for your business. A lot of small businesses don't know how to market their businesses appropriately, and you can sink a lot of money and a lot of your revenue very quickly in spending things, on meta ads or whatever it may be. But if you're not putting the right content into that marketing or you're not marketing it to the right people, it's essentially wasted money. And Cory, I'm going to let you
Hmm.
take the floor on this one because you know a lot more about this than me. But yeah, honestly, a lot of businesses have wasted a lot of their money on bad marketing.
Yeah, unfortunately that is the case, and unfortunately there's a lot of professionals that probably um, discredit those of us that do a good job with marketing. But yeah, I mean, look, you know, from the minute we start talking to some businesses about websites and they have this, I still think there's an opinion out there for someone that hasn't done business before that a website's magically going to generate sales, and it is not. You have to find people to push to the website, right? Traffic.
Mm-hmm.
Uh, and then you've got to really figure out how you're going to get traffic there. So if you don't have the budget for SEO or paid ads, whether it be on Meta or Google, then you've got to do your own stuff. You've got to go on into Facebook, into social media. You might have to do markets. Somehow you've got to get your brand out there for people to try, right?
Mm-hmm.
Um, and there's various different ways you can do that. But I think a lot of people get burnt with ads. They think ads are this magic solution. They either try and boost them and don't know what they're doing when they're boosting them. Boosting really should only be used when your Facebook ad's already doing really well. The whole point of boosting it is to boost what it's already doing.
Mm-hmm.
Okay, you don't boost a rocket when it's on the ground, you boost it when it's in air, when it's
Mm-hmm.
already moving. So you, yeah. And if you're not an ad specialist and you're not too tech savvy, then, unfortunately it's best you pay someone, but then of course that comes with an extra cost. Um, so when you're selling a business, you need to have a really hard think about how you're going to get people to buy and to see whatever you're doing first. And
Mm-hmm.
if you're already in business, and you're struggling to make sales and you've got cash there, then we can have a chat about different ways you can use that. You
Mm-hmm.
can do if you have a database of people, if you've been going for a while, you can do EDMs to nurture them. That's essentially free apart from the software. Um, you can probably do some sort of post campaign, or there's influencers that maybe are going in or out of fashion a little bit, but they're still
Yeah.
probably relevant for some businesses.
Mm-hmm.
So just don't think ads are the magic. Um, what's the word? The magic thing
Yeah.
um, for you to get sales, because they're not. And if you're going to hire an agency to do them, don't just go for the cheapest one, because there's a reason why they're the cheapest one.
Mm.
Um, look at reviews, look at feedback, ask for
Yeah.
case studies, do your due diligence. Yeah, be
Yeah.
smart about it.
Exactly. So I think that's a really good point to end on. And also, I do want to mention you kind of talked about social media. This podcast now has a TikTok account. So if you want to be alerted of when a new episode drops, or if you just want to see fun wee snippets from the episode, then go and follow us on, I think it's business.unboxed over on TikTok. And as you guys know, we also have a YouTube account, which I think is Business Unboxed NZ, or Business Unboxed Podcast. I'll put it in the description for you. So yeah, go and follow us and engage with us, because we want to hear what you guys want to hear us talk about. We hope
Hmm.
that you've really enjoyed this episode. You've gotten some use out of it. You're going to go and apply this to your business, and we'll catch you in the next episode. Bye.